Why it's so important to master these 5 steps to make sure your business thrives. Tip 1, inside your business bank account, set up multiple accounts. Have an account for cash flow, have an account for taxes, and have an account for wages or salaries. Use a very simple accounts software. If you want to send invoices out, if you want to make a note of everything that you're spending, make sure you put it into a very simple tool. Always pay yourself. I know I said in the past, be prepared to sacrifice your salary and give it to someone else to grow, but make sure you still pay yourself. You have bills. You have things that you need to have in order to survive, like rent and food. Make sure you pay yourself, and then you will be able to dedicate all of your effort, all of your time to your business. Tip 2, mastering cash flow management. Business is very simple. As long as you have money to pay your bills, pay your wages, and pay your rent. You can't know what's coming in if you don't realize and understand what cash flow means. Count what you're potentially going to make this week. So on Monday, set up all the invoices that you know that need to come in. Make sure you write them down in your budget or in your cash flow sheet, and make sure you collect. But once you have it written down, you'll realize, okay, today it's 2,000, tomorrow is another 2,000, then it's 4,000, and you're gonna go after it and collect it. And you understand that you have that cash now in your business to pay the bills that definitely are coming. The second part of mastering cash flow is to make sure that you forecast future incoming earnings. You know that you closed a contract. Let's say it's for $10,000 and you get paid over that month. Make sure you write that down. Open up your budget, your spreadsheet, or your accounts package, and put the invoices in against that client. And then you know that you need to go collect it after you've done the work, but also you know that your business has earned that 10,000, even if it is in the future. And with that cash flow and that budget report, you know what you can do, whether it is expanding, getting new equipment, spending a little bit extra on a project in order to get a bigger return later on. If you have an overdraft or a short-term credit, make sure that you optimize as much as possible those payment terms, the percent, the installments. Make sure you know that when it's coming, what's due, and every time you have the opportunity to discuss with your bank, let's say for example, after you pay off the loan and you want to get another one, make sure you talk and say, hey, I did really well in the past. I made sure that my payments were on time all the time. Can you give me a better rate? I'm a good customer and I will be a repeat customer. Go in and optimize those payments. In every company, you should have a budget. And that's not just for governments. It's for companies as well. It's super important. Obviously, huge companies have departments dedicated to it, but in small businesses as well, it is very important. So what is a budget? It obviously is spending an allocated amount of money, which obviously you get from income, but make sure that you have it written down somewhere and you know all the ins and all the outs. It's that simple. Make sure that you do it today and start now. It will change everything in your business when you know what's going out and what's coming in. So how do you do it? Set realistic goals. On a budget, there's no point in saying I'm gonna earn 100,000 when it's not even possible because you don't have the ability, you don't have the team, and you don't have the product. But whatever you do have, make sure you set it realistically. Back when I had the agency, I said I want 4 projects every single month and I wanted to get no less than 10,000 euros per project. That meant I had 40,000 euros that month in my budget. That was my top line. That's what I aimed for and that's what I went for. That doesn't mean I'm gonna spend 40,000 euros. It just meant that was my targeted goal, which was realistic from my company, and I knew if I achieved it, I would have 40,000 euros in my company. So anything that I had to pay, like my rent, my salary, my bills, I was able to afford it, and I had a surplus to carry into the next month. And obviously you do that month after month, and it ends up in profits, and you get your dividend. Track all spending. In this budget, you track every single thing that goes out, even if it means you're tracking the Nespresso that's used in the office. Make sure you track everything because all of those small things, they add up. Know what your team is spending. Have your team track spending for you. It's super easy. And also, you make them accountable for what they spend and how they spend your money. This will make them more responsible and will increase your profit. Like governments, budgets need to be flexible. If you put it as really, really strict, you'll catch yourself out. Sometimes you will have extra, sometimes you'll have less. And the idea is that you think about it over the 12-month period. Every year is broken down to those 12 months and you set payments and you set budget allocations per month. And it's a give and take. So be flexible, not too strict, but make sure it's a realistic budget overall. You're here to focus on your mindset shift. You need to start today. What better way to start than to join my Telegram? And start now. Don't forget to like and subscribe and comment what areas of this video you want to learn more on. Tip number 4 of financial literacy is understand some element of financial statements. Every single year, your accountant is going to provide financial statements. And at the bottom, it's going to tell you how much you made. But in the middle, there's going to be a lot of questions. I thought I was doing better. I thought I was doing worse. I didn't realize I was spending so much here or there. Those line items that are in your financial statement, it would be good to brush up on what they mean. Things like cost of goods. A lot of people don't realize these things. Cost of sales. You have to have a little bit of knowledge about these things so that you can actually break down that financial statement and plan for your next year, plan for your next quarter, and just take in any lesson that you can get from that document. Understanding financial statements is a little bit daunting, but when you know the basics, you understand the health of your business, the pulse of your business, whether it's worth doing year after year. And what I always like to do, especially when I started, I always consulted with somebody that I knew financial statements, someone that had 15 years in business. I showed them my financial statement and I said, what would you ask if you were to ask me questions here? They point out all of these things for you, and they can break down your financial statement and give you a pulse on your own business. And sometimes when people understand how to read a financial statement, they can tell you how you're doing better than you can yourself. Tip number 5, and in my opinion, the most important tip, plan for taxes. You're always going to have to pay your tax. You can't skip it. Taxes and death. 2 things you're guaranteed. If you earn money and you have to pay VAT, make sure you set it aside, whatever the percent is. Remember I said earlier, set up 2 accounts inside your bank account? Set one up just for taxes. You know that you earn €1,000 or $1,000 and you have 20% tax. Put €200 or dollars into that account and leave it there for that fiscal period. And you know then you have 800 to work with for your business. And that's your cash flow account. That's what you know that you got to spend your salaries, your rent, your bills out of that. Don't ever spend the tax money. In order to plan for your taxes, you need to know all of your obligations. So you open a company, you think it's great. But when you start earning, there's a minimum amount of money that you can make before you're actually obliged to pay any tax. Make sure you know it. But when you pass that, you have other obligations like VAT threshold. You've got to charge VAT now. When you employ somebody, you have to pay their social insurance. You got to pay their pension contributions, whatever it is. Know your obligations before you enter that project or enter that business, because you're guaranteed that you will need to pay it regardless. Now that you've set aside funds and you know your obligations, also research what deductions you can leverage. Sometimes in certain countries, you're able to use big expenses as write-offs against tax. If you invest in projects, if you invest in equipment, you might be able to use that and write it off against your tax obligation. Also understand and learn these things, because this will really help you when it comes to tax filing. And if you don't know any of this, consult somebody. Spend 1 hour of time just talking about that with your accountant or a tax professional. It will do you the world of good and will increase the health of your business. Make sure you separate finances, understand cash flow, budget, be able to read your financial statements, and plan for taxes. Do you want to know more? Go to owen.com where you can see everything that I've done for the last 10+ years.